Hello everybody, welcome to your weekend edition. Happy Friday everybody. I'm taking a switch up from the whiskey, going with a nice cold 805 today. So cheers to everybody out there. Hope you had a great trading week today with some great trading as well. I did sell some more options today. Did I buy crypto today? No, I bought crypto yesterday. We bought some CRO, which I can talk about as well, and a few other trades, which maybe if we get to today, we'll talk about. But first, a sip of this frosty beverage, and cheers to Dana, Skilled Stocksman. Yes, I did see a second hammer on that ES. We got NJ, Mr. Rostokor, Margaret, Shadow One, Ivan, Rob, and good day to you, mate, over in England. No, it's probably nice and cold over there. We've got Dodgy Parties, Dodgy Prince, and Rubbish Cricket. I never got into cricket. I just can't seem to get that. Now, football, that one I like. What else we got here? Big Eb, cheers. Les Gold, Shadow One, Todd Olson, and of course, we've got Tom, who's not with us today. He's actually in class with Larry Jacobson, taking options. So cheers, everybody. Have a fantastic weekend. All right, let's do this. First off, for those who might be new, hit that subscribe button. You know we do this show every day, Monday through Friday at 2 p.m. Pacific time, and you can always send me questions in at TraderMerlin@gmail.com, which is how this show will go today. It's pretty much going to be all questions, and I received a couple really funny ones. I do my best not to incur the wrath of anybody or overstep political lines or go too extreme to one edge where somebody gets all their feathers ruffled, but I will tell you about, and I wasn't necessarily feathers ruffled, but somebody didn't like what I talked about. So I will show you what that's like today. Hello, Chris. Good to see you. Here is our topic. It's Trading Week Wrap-Up. And, of course, earnings will be one of our first stops to talk about. I probably should have switched up my image and put a beer in my hand, but it was last-minute decision. It's going great. Big Up, I did not buy puts today. I actually sold some, which I know might come as a surprise. There were a couple markets that looked good. I was looking to sell some puts for my 1% portfolio and also looking to sell some calls against my SLV, but the premium just wasn't worth it for me to sell calls, so I didn't have to do anything of that. Do you have any thoughts on BCT coin? Not yet. Let me see. I'll have to check up. Look at that one. Good morning, Gilbert, or good afternoon, good night, depends which part of the world you're in. All right, let's start things off with macroeconomics. As you know, we had CPI on Wednesday, PPI on Thursday, and then today was the retail sales number. And if you understand, that retail sales number that came out today was supposed to reflect December's consumption, right? And in theory, December should have been this great month, holiday season. Granted, November is probably a better pure spending month because of Black Friday. But let's be honest, all the women buy on Black Friday, and all the men, we procrastinate, and we're literally buying stuff December 24th or 23rd or just the last couple days. So hopefully you did your spending to support the economy, but the retail sales numbers that came out, they weren't good. Here they are, and I have this chart on top of it, or underneath it. You notice the retail sales numbers for the previous month for November were only an increase of 0.2%. They expected it to be zero, meaning no increase in spending. We came out at negative 1.9. Now, I know for many, they're like, who cares? That doesn't really mean that much. It's only negative 1.9. Well, what I want you to look at is this chart here, and I think I might have this pen working. Hopefully I don't screw up this time. Nope, of course I screwed it up. Let's see, how do I go backwards on this damn thing? There it is. So this right here, this little candle, or bar chart, notice the blue represents the actual number, so it's negative 1.9, and the gold represents what they thought it was going to be. Now, if you look historically, it doesn't seem like it's that bad, but remember, these first two big down days, these down ones here, that was the absolute freak out of COVID. And then you had this one as we kind of, oscillated back and forth. Now all of a sudden we're dripping down again. Well, it hasn't been this low other than these 1, 2, 3 points of contact here. So these three outliers I put X's on. It has not been that low since 2008. Just to give you an idea. I mean, that's 14 years it has not been this low, and we shouldn't be in any problem right now, should we? We've been spending trillions of dollars to get the economy back on track. We've got unemployment at great levels. GDP looks good. Economy looks great. And we're spending like crazy to get this market moving. Yet people aren't spending. So to me, this is one of those ones that I don't think it means much right now. But if we get another reading that's negative, keep in mind this is the driver of the U.S. economy. And I think if we see this, a series where it starts to get slightly progressively worse, it will have a dramatic impact on our markets at a point when we need spending right now. If you think of where we're headed, you had Jeff Manson talking about markets going to all-time highs, Scott McCormick talking about markets going to all-time highs. A lot of people feeling rather optimistic, But if people aren't spending, our businesses will not have those sales numbers to drive the market higher. So I thought I would share that with you. Retail sales usually isn't the major catalyst, but I saw this morning and I was like, oh boy, that's granted it's 1 point data, but we'll see what happens for the next month. Remember, this is December's reading, and I expected it to be a lot better than this. That's not a good sign. We could point the finger at supply chain disruptions, but I think what most talking heads are saying is this is proof that inflation is reaching the consumer, because we're looking at goods and services and just not being able to afford those or wanting to pay those higher prices. I definitely think that's a piece of it. I also think that maybe it had to do with some supply chain disruptions and the things that we wanted to buy we couldn't get, right? Can I get my Xbox 6 or my PlayStation 5? Yes, I could get it, but I have to go to eBay on a secondhand marketplace and spend $1,500 when the list price is like $400, right? So to me, that's where I think that damaged some of these retail sales. So we'll see if the supply chain getting somewhat better in 2022 impacts this going forward. But this was definitely probably the biggest eye-opening number for the week was the retail sales numbers. Merlin, can we get to a point where the consumer has nothing more to buy? No. There's always something. It's called marketing, right? They will always convince us to buy something. Les, thank you very much, sir. I appreciate that. From Cape Canaveral donating today. I appreciate that. Glad you had a good week out there as well. Catherine, good to see you. Happy Friday. Cheers to that one. Jerome should pay attention. Well, look, trust me, Jerome knows this stuff. Jerome is definitely on it. We can all badmouth the Fed and Jerome all we want, but, if you stop and think about it, how many moving parts is this guy trying to juggle? And I know they have this dual mandate, which sounds very simple, but first and foremost, they have to look out for their own best interest and the bank's best interest. Number two, they're looking out for the economy. And number three, they've got millions of different data points being thrown at them. So, it's easy to be a Monday morning quarterback when we look at the Fed, but honestly, I sure as hell don't want that job. No way. None of you who are watching this right now would ever want me to be the chairman of the Fed. You know why? Because if the market went to hell in a handbasket, I'd say, we're not stimulating the market. Let it figure itself out. I'm free markets. Let the market fix itself, right? You got in this situation, we will get out of it without us having to intervene. Instead, we got to play, Big Daddy and support everybody's market. But someday that might change, but not in my lifetime. All right, so on that note, we'll go from the retail sales numbers, which to me were kind of frightening, to what I think was really exciting, earnings. You guys notice this is what happened today. It's the kickoff for earnings season. I need some dramatic music to really emphasize how excited I am, because finally we get some major market movers. For those of you who are options traders, you can be selling and getting some epic premium on some of these ones. Well, look at these numbers, right? So what I have here is just the banks. This is predominantly what came out today was all banks. So you had JP Morgan beat, Citigroup beat earnings, Wells Fargo beat earnings, BlackRock beat earnings, First Republic beat earnings. All five of our major banks, and of course First Republic isn't a major one, but you look at JP Morgan, Citigroup, and Wells Fargo, those are, arguably the three horsemen. If we could throw Bank of America in there as well, but they're reporting next week. All of them beat. And, you think, wow, these are some pretty, especially Wells Fargo. Wells Fargo just slaughtered it, 26% beat. But notice, out of all of them, JP Morgan down 6%, Citigroup down 1.28%, you had BlackRock down 1.27%, First Republic down 4%, only one, Wells Fargo, up 3.73%. To me, this is not a good scenario. You kind of look forward to earnings season kicking off with excitement, with jubilation. And even though they all beat on earnings, every single one of them, I made it a point I'm not sure, honestly, I've done so many presentations for you guys and for OTA and other environments. Yeah, right. Sorry, DJ, not going to happen. I do not want a political office. Although the thought of making, $100,000 a year for the rest of my life after I retire, just because, that sounds pretty appealing. Anyway, if you look at all of those beating earnings, you would think that, yes, this is great for everything going forward. And I've been saying in different forums that, look, I think that one of the big things we're going to be looking out for in 2022 is earnings. This rally has been fueled by corporate earnings, great earnings. And if those start to slow down, or the expectation is that those earnings are going to start to slow down, it's just one more factor that I have on my list of pros and cons, why the market could go up or why the market could go down. And the more I start to look at the data points like this is actually starting to lean towards the negative side. Why? Well, look, this should be great. These stocks all should have had up moves today, nice positive moves, and I'll show you the charts here in just a second. Only one of these five did, yet they all had blowout earnings, right? That should shouldn't be like that. Every one of these should have been up today, and I think it's a combination of some of the inflation data we had earlier in the week plus our retail sales numbers casting more doubt on the viability of these companies having great earnings going forward. Now, granted, rising rates do help these firms because most of them are lenders and are doing loans, but the market apparently not liking it. So what do the charts look like? Well, first thing, one of the ones I was looking maybe potentially sell some puts on was XLF, but it just doesn't have enough pain in it yet for me to sell. I like to sell options when there's just agony and the blood in the streets, right? I love it. I know it sounds so bad, but I really do like to look at a chart and go, oh man, people are suffering right now. Well, it's not financials. Financials look okay, but look at the ones that came out with earnings already. And I'm hoping that we can see some patterns here that might support my opinion that things are rolling over. JP Morgan, here's JPM. Right, so you look what happened with JP Morgan, and really what's JP Morgan done for the past year? Not much. Yes, granted it's up a little bit overall, but it's just been floundering around, not really any great sense of direction for JPM. Well, let's look at number 2 on that list, which was Citigroup, which had a 5% earnings beat. Citigroup looks like it's been downtrending since April of last year. Lower highs, lower lows. Now, granted, it had a nice rally up into an area of supply with shooting stars. Hallelujah. Today you had a fairly decent down start. It did recoup a lot of those losses. So Citigroup, to me, this is a case for potentially shorting the rally if it comes back up here to 68. All in all, not looking good. Now let's look at the old crimester, Wells Fargo. See what kind of fraud they're doing internally. Something looks different with this one. So I don't know what on earth is going on with Wells Fargo. I have not taken any time to read through the financials or the press conferences after these yet. I just haven't had time today, but I will. Look at this chart. There's their daily. I'm going to go to a weekly so we can see the big picture. Right? We are screaming up into this area of supply that goes all the way back into 2018. My guess is on Wells Fargo, we'll probably close this gap and see it rally up to somewhere around $66. Again, trend is your friend till the bend at the end, and I don't want to argue or hypothesize about why Wells Fargo is doing so good. They just are, right? I agree, Big Ed, but remember, if you do, you're shorting literally one of the strongest looking financial stocks that we're going to check out today or in the market, period, right? So you're going against the grain, but let's bust out the yellow box. Dun, 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 dun. I mean, you look at it right now, we are dead center of it. I mean, and that's going back to the supply zone here. You have another one that's even higher up. It's a bigger zone for sure, but bam, there you go. So I think either one of those two could be good potential shorts. Now, to Big Eb's point, I have to say I kind of agree with you. Not that I don't hate it. I love agreeing with Big Eb. But if you look at it now, when something has a huge day after earnings, usually that's an emotion-driven event. I like to short after earnings because the premium gets evaporated out of the options so I can buy puts at a much cheaper rate as opposed to trying to buy puts before earnings announcements when those premiums are really elevated, right? Remember, before earnings, you want to be a seller of options. After earnings, buying is fine. So I look at this, and I do think you got some great shorting opportunities. We'll see what happens on Tuesday when these markets open back up, but this looks pretty decent for a short right now. The only worry is you are seriously going against the grain, but sometimes you got to do that, right? As they say, the markets do what everybody least expects. Right now, it looks like Wells Fargo is going to go higher on all fronts. Therefore, shorter that supply. Let's do it. Mark wants to put RSI on the chart. Oh boy, we got Brandon rubbing off on some people here. Let's go and throw on a relative strength for you. RSI. Okay. Well, I think I added it. There it is down at the bottom. So, your tech, and I use different numbers. I use the historical numbers. I know that Brandon uses modifications. I like to keep the defaults. It's in a situation where it's just about overbought, right? I personally would rather use stochastics, but stochastics is going to tell me it's overbought as well. So now we have an overbought situation on two different indicators, stochastics or RSI, or even Bollinger Bands, right? If you guys put on Bollinger Bands here, what's going to happen? It's going to say it's overbought, period, right? It's outside the upper Bollinger Band right now. How do I know? Well, let's put my money where my mouth is. You can just look at the price patterns, guys, and you'll know that this is going to be outside of its upper Bollinger Band. Now, this is on a weekly too, right? So keep that in mind. I am on a weekly. And let's go to indicators, and we'll go Bollinger Band. Bollinger Bands. Let's check that out. And we should be ripping outside the upper Bollinger Band right now. Ding, ding. Oh, that was tough to figure out. There you go. right? So 2 days outside the upper Bollinger Band. And remember, that's kind of like a rubber band pulling away from the wrist. The red line in here is your wrist. That's the 20-period moving average. And as it accelerates away, you know the likelihood is it's going to snap back to normal. And when it does, it's going to hurt the further it extends out. So you've got overbought on Bollinger, Stochastics, and RSI. You're coming right into an overhead supply zone, and you just had a great earnings season. I like it, right? All these different factors. Again, none of those mean that you're going to have a winning trade. You could easily have a losing trade on this one, so just be careful with your rules. Now, I'm not done. We had Wells Fargo is the last one we looked at. Let's check out BlackRock, BLK. So here's BlackRock, and this is a weekly. I'm going to do back to the daily because I prefer dailies. And my Bollinger Bands are annoying. We'll remove those. Look at the nice naked price. So here you have a situation where, again, for the better part of 6-8 months, BlackRock hasn't done much, right? We gapped down today, and you're right near those lows. You can see those lows from September, maybe early October. We're coming right down to it. That might actually be a good point to buy here if you're confident on financials. But if you get below 819 on BlackRock, you got a lot of downside potential movement. I think you can see it fall all the way down here to the 720 area, right? So it has been showing some weakness recently, and who knows? Interesting people are saying short Wells Fargo. Hey, again, Patrick, trading works because we all have opinions about where it's going to go. I could bring up a chart of any security you want, ask everybody here, and say long or short, and I'll get a pretty mixed bag of results. That's fine. And again, we nobody here can badmouth anybody for saying, well, I'm bullish on something or bearish on something. What's your plan? All right, that's fine. Are you bullish for the long term, the short term? How are you going to play it? I'm fine with me. The only reason I'm drinking this right now is I see 805 on the screen, so I had to put an 805 in my mouth. There you go. Done. Get in my belly. All right, so I have one more on this list of financials, not necessarily the biggest in the world, but I thought it might be interesting to look at FRC, which is First Republic. And here is another one. Notice this is a very interesting picture. It looks like a kind of an odd head and shoulders pattern, but it looks like you're coming right down that 192 mark. As you guys can see, 192 has held here for quite some time. We've not had a close below 192 since July of last year, and we closed right at it today. This is one of those ones that keep an eye on this one for next week because it could be a great shorting opportunity if we get a close below 192. It's been showing a bit of weakness, at least for the past 2 months. So overall, what does this tell us? Well, it tells us that many of these financials are showing weakness. It also says that some of them are giving us some great trading opportunities, like Wells Fargo probably has a decent short. Now, next week, we have Bank of America, you got Goldman Sachs, and a whole slew of other financial firms reporting, but this is not the start that I think the markets wanted. So, we've talked to a few traders who have been very bearish on the market, some have been very bullish. Cool. Everyone can have their opinion, but the chips are kind of more lining up to negativity because of the earnings season that was reported today. So anyway, I wanted to start there since this is the trading week wrap-up. Let's go into some of those details. And I, for one, obviously am very excited because I think earnings season is always an exciting time of year. It adds a whole other dimension to either it's just macroeconomics and charts, or now I have macroeconomics, earnings, and charts. Give me more to look at. Ooh, yes, give me some Hen House beer. You know where that was started, Alex? You know where Hen House was started? This is a great story. Maybe I told you this one before. I love it. It's kind of a good story. I have my issues with the owners of Hen House Brewing Company at this moment in time, but Hen House Brewing Company was started at my house in Northern California. I rented out to a friend of mine, and probably 20 years ago we took brewing classes. So me and 3 other buddies of mine took brewing classes, and we go back to my house and we brew beer and just have fun. And brewed probably 100, 150 different batches of beer over the course of years, and had all this equipment. When I moved down to SoCal in 1998, I couldn't take all that equipment with me, so my tenant asked me, he says, hey, do you mind if we start using your equipment? I'm sure, go for it. So he started brewing at the house, and then him and some buddies started brewing, and then next thing you know, they opened up a brewery. So it's kind of a cool story to know I had some part, a small little piece of Hen House Brewing Company. Yep, Scott G. Okay, now, here we go. Now we get to get into a little bit of, not contentiousness, but I think this is something that I personally have had to work on a lot, is just basically being accepting of other people's viewpoints and taking a step back a little bit and being open-minded to something. Now, for those that don't know my story, I came down to Online Trading Academy in 1998. Seems like forever. Chris, how old are you in 98? You were a kid. You were 18 years old. Chris is an old man now, an old mechanic. But I came down to Online Trading Academy in 1998, took my first class because I saw technology that was different. Direct access trading was the first time that you could direct your own order flow as an American, right? Before that, you had to go to a broker. There was no way for you to do it by yourself. So I saw this technology and I said, this is going to change the markets. This is the future of trading and investing. So my professors all told me it was a scam, it was a scam, it was a scam. I'm like, no, I appreciate your perspective, but I do see legitimacy here. So I could have been wrong, but I ended up taking it down, going down, taking the classes, and learning this new technology, which probably was one of the best things I've ever done, because not only did I learn trading and investing with Online Trading Academy, but I met a lot of great traders over the years, and my skill set has grown to now I can trade long-term, short-term, stocks, options, futures, forex, commodities, real estate. I can trade Beanie Babies or Cabbage Patch Kids if I needed to, because I understand supply and demand very, 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 very well. So Edwin sent this question in, and I kind of chuckled a little bit, but I'll be very nice to you, Edwin, on this one. It's okay. You're entitled to your opinion. Edwin says, love your show, but hate it when you talk about crypto. It's a scam, all of it. There's nothing backing any of it. Stick to stocks. Well, I think that, I've mentioned this before, that when some people don't understand something, it's easy to point a finger and say it's a scam. There's over $2 trillion in the marketplace right now. And that's not just retail, that's institution money as well. And there's a lot of money pouring in. I'll show you a chart here, and I'm sure that the chart doesn't mean anything to you, but here's $2 trillion. And I'll go back, let's see how far back I can go. So you look at when the internet got started and how people said, oh, this isn't going to work, or .com stuff, oh, it's a scam, blah, blah, blah. You get it all the time. But most people weren't really into crypto back in 2014, 15, 16, and then it started really getting attention in 2017, and money poured in. If this wasn't a scam, you think $2 trillion, including hundreds of millions, if not billions of institutional money, would be pouring into the market? I disagree. I think it's just the changing of the guard. It's a new technology displacement. It's kind of like saying that that locomotives were a fraud. Oh, don't use locomotives. Horse and buggies where it's at. Or what's this four-wheeled vehicle rolling down the streets? The Ford. Ew, it just sounds stupid. What a scam. I'm not going to buy a Ford in 1905. These are technological changes. So I would encourage you, Edwin, to learn more about it. Granted, you are right on some fronts. There are a lot of cryptocurrencies that are absolute scams. Total shit. They're shit coins. They're pump and dump garbage. Just look at the social media profiles of Kim Kardashian and who else was it? Nelly or Kanye West or one of these guys doing pump and dump on crypto. Yeah, that's a scam. It's not backed by anything. But if you look at things like Ethereum, which have tens of thousands of companies utilizing that platform to do business, making money. They're selling products, right? They are providing services for liquidity in marketplaces, for lending protocols, where you can actually go and loan out your own money and make way better interest rates than banks. It's changing the landscape of how you and I operate. Now, I posted, actually right down below the comments, or in the comments to this video, there is a free link to 6 free videos on cryptocurrencies. They're very basic to understand the basics. Oh, it's Floyd Mayweather, NJ. Yeah, thank you. Yep, Floyd Mayweather. So, for me, I don't know, before you say it's all a scam and hate something, take a step back and be objective and say, is there a problem in our current financial system? And I think everybody here would agree, yeah, there's problems. Banks have too much power, right? They have the ability to turn off our savings if they want. They don't pay us enough money for our money we do have there. There's a lot of scams and fraud in the financial world. I say that's a bigger problem. So let's find solutions to fix that. And many of the protocols which you think are a scam are designed to fix those problems. You just have to understand how they operate. So check out the free videos. There's 6 of them in that link down below. Literally like what's decentralized finance, how blockchain works, kind of the history of money, which I think is a very important one. But those may help you out, Edwin. And if you have questions, just email me. I'm not trying to convince you that this is the greatest thing in the world. I am convincing you that this is here to stay. In some capacity, we will have digital assets and cryptocurrencies, not just in the U.S., but it's a global phenomenon as central banks will be moving to digital currencies, and something we have to learn about and accept. And I think there's an old phrase that says, you adapt or you go extinct. Well, I think adaptation is something that's key for all of us as traders, whether we're trading stocks, futures, or forex, or options. Markets will evolve. This is just, instead of one asset class evolving, this is the entire ecosystem of money, finance, and transactions evolving. So there you go, Edwin. That's my 2 cents to you. But I appreciate the email, and thanks. I will keep talking about crypto on this show. I won't make it the focus, but we're going to keep talking about it. And that said, Dora says, my son keeps talking about Bitcoin. What would you suggest is the best way to learn about it? Dig deep. Dive into the markets. Dive into it. Before you start throwing money at digital assets, learn about it. Again, I have 6 videos for you down below that you can watch to learn the basics of it. I also have a course for Online Trading Academy. If you're interested, there's many options for you there. But the best way to learn about it is just to study it. There's a couple really important people. Andreas Antonopoulos is one. It's a tough one to spell, or I would try to spell it for you. But Andreas Antonopoulos, he's one of the pioneers of the education space in Bitcoin. And also, there's one out there. His name is Robert Breedlove. I would definitely check out what Robert Breedlove has done. He has an interview he did with Lex Friedman, which I think you might find very interesting, and it really talks about what money is. And I think when we understand the fundamental problems of fiat currencies, not just the dollar or the euro or the yen, all fiat currencies over the course of time suffer the same fate. They all go away. They go extinct. There's been no successful fiat currencies in the history of the world. Where do they go? Why do they disappear? They all have the same basic problems, and the dollar has those problems. Bitcoin, as a digital asset, can fix almost every single one of those problems. Why not look into that? So Robert Breedlove would be a good resource for you as well. All right, what else do I got here? Taking off Fairfax? Man. Breweries, I love beer. On that note, one more. Okay, another question. Again, if you guys have questions, it's a scam to those who don't own it. Yeah, true, Big Eb. And, and I think the best way is, thanks, Todd. I try to build something that was nice and informative, and free is always nice. For those who continue to think it's a scam, it's okay. Then don't get involved with digital assets. Don't get involved with Bitcoin or Ethereum or Litecoin or any of these things. Stay away if you feel it's a scam. I would say that's the same thing as anything. If you feel that cars are a scam and they're a hazard to life around the world, then don't get a car, right? If you think that clothing is dangerous for you because of all the chemicals and fibers in your clothing, then run around naked. Now, society might have an issue with that, but we have the freedom of choice to do for the most part, what we want. So no one's saying you have to get involved with crypto, but I think at some point, if you look 10 years down the road, you won't have a choice, right? It's kind of like saying, well, I don't want to use the internet in 1995. That was your choice. Today, you kind of have to use the internet to communicate for work, right? It's in your business environment. I think that's what we'll see in 5 to 10 years in crypto as well. Really, you think the banks are trying to corner the market, as in kick out the whales and dominate the space as market makers? I don't think they're trying to do that quite yet. I think you're going to see them jump in the space more so they can have more influence over the markets, right? At this point, it's still, most of the tokens or coins of these different projects are with whales. Right, I'm no whale. I mean, I have a good amount, but there's no way I'm going to move a market with what I have in the crypto space. But I think if you look at, the JP Morgans, the Goldman Sachs, I think that they're going to try to invest or get involved with the lead projects if they're centralized. Again, my big argument is go for the decentralized projects. That to me is where the fun is at. Yeah, right, Catherine? I'm all about the interest rates in crypto. Hell yeah. It's crazy, and I'm not encouraging you to do this. I don't think, I just want to put it out there. I can go out to, let's say, crypto.com, and I can invest a stable coin, which is pegged to the dollar, so I'm not getting any, crazy volatile risk, no 50% down moves. You're not making or losing anything on the stable coin, except due to inflation. So I can deposit stable coins at crypto.com and get 14.5% interest. 14.5% interest. But I can go down to my local Bank of America here, get a credit line for, let's say 5%, 6%. I don't want a credit line to get, 6%. And let's say I get a $50,000 credit line. So now I take $50,000 that I'm paying 6% on. I deposit it at crypto.com, make 14.5%, which basically means I'm making 8.5% on $50,000 for free. That's interesting. Anyway, you're right. The rates that they're charging are absolutely nuts for some of them. And it's going to go down. It will go down. But right now is just kind of the glory days of it where I'm parking all my crypto in different brokerage firms, earning yield. Hell, if I keep my Bitcoin at Coinbase, I make 0. If I keep it at crypto.com, I can make upwards of 12.5%. No, it's 8.5%. It's the max there. Do it. Anyway, let's see. Here's another question came in. What time we got? 30 already? Holy cow. Trent says, I bought DigitalOcean for a while and today was bad. What do you suggest? I don't know. DigitalOcean, DOCN? DigitalOcean. Oh, God. I got to ask, Tran, why were you holding this for some time? If you were holding this back last year in April, May, June, July, August, when this thing went absolutely nuts, great, good for you. But this is why we use stop losses. I don't know when you bought this. Oh, sorry, I'll chart it. There's your chart of it. I don't know when you bought this, but it looks bad right now. I mean, the way this thing is trending, it looks like it's going to go right back down towards its IPO price here, which is going to be down around $42. You do have some demand right around $50, call it $52. I don't think it looks really good here at all. Unfortunately, I'm a trend person, so you have this really strong downtrend. Today you were down 9%. My guess is you'll probably see a little bit of a bounce to the upside, but not much. I don't think it'll go past 75, as this thing will probably continue to drift down here. Not looking good for DOCN. So sorry, Tran, probably not what you wanted to hear, but holding and owning something that looks like that's the wrong side to be on. If you told me you were long right here, I'd be like, awesome, this looks great. What should you do? You should move a stop loss up. So if it does drop, right, you are protecting your profit. So let's say, for example, I put a stop loss here at 105. Okay, great, fine. Oh, it took me out that day. Done. Give us 7 cryptos to chart. What do you mean, Mark? You want me to chart out, like do charting on 7 of them, or you want me to just give you a symbol so you can play with? All right, I had one more question. Oh, and this is a good one from Lee. Lee says, thoughts on buying Netflix? I actually was looking at this one. Let's check out what Netflix charts looks like. NFLX. So the first thing you got to know is Netflix comes out with earnings next week. It's the first thing you got to know. Second thing is, this looks just like that last chart that we were looking at. It looks pretty bad, right? You've got a massive, so this thing was $700, now it's at $525. And I know what a lot of people are thinking, discount, right? This thing's cheap right now, it's got to bounce. It does not. This is not exactly a great demand zone, but I just drawing out a reference here that you can see it's back into this big area of consolidation that we saw back in July and August, right? This is not a bad buy point. I think you're probably okay buying here, but you notice that really for all of 2020 and half of 2021, it was stuck in this range right here. So, if we get below this, where it's at right now, let's say get below, what's the low of this box? If it gets below, let's say 508, I think you're going to end up challenging some of these lows and just keep on drifting lower. I am a Netflix user. Netflix is great, yada, yada, yada. But, I don't know where this was going or what's broken with it, but it does look broken at this point in time. Maybe they need another Squid Games to get back on track. But, if you're playing this one, I think buying the dip right here is probably fine. Just make sure you have a stop loss. But next week, I think that I think that they report earnings Thursday or Friday of next week. So be real careful. Earnings for Netflix is always a wild, wild ride with tons of volatility. So be careful with that one. All right, so you want to know about 7 different cryptos to chart out, huh? I would stick with the majors, right? I would stick with the big stuff. So your majors, let me bring up a symbol list here just so I can think of some off the top of my head. Obviously, Bitcoin and Ethereum are on your list, right? Oh, really? Yeah, raising earnings or raising subscription fees? They did that before. So let's go look at this price chart. So Catherine, I've got a pretty extensive list here of ones. If you want me to the top few, certainly Bitcoin and Ethereum have got to be on this list. There's a couple others that I think are technically showing some good patterns. So for example, Sand, which is one that I'm in. I'm currently in Sand. You have this, it looks like a descending triangle, but it's really been, basing along this $4.15 mark. It's a much smaller price point, but Sand is good. Solana is a really popular one, which at this point has just been trending down, looking weaker and weaker. So there's 4. What else is a good one? No, don't look at Ripple from a technical perspective. Now, Luna is one that's kind of playing the game of their own, right? They are just rocking, and while everything else has really been getting hammered, Luna continues to rock. And I think that presently the valuation of $82 is real cheap compared to what I see them doing. If they can accomplish what they want to do, Luna would be a decent one as well from a technical perspective. Nice uptrend, higher highs, higher lows. My guess is this next push you'll break above that 100 mark. So that's another one. Chainlink as well. This is one of the king of the Oracle space, although technically the chart pattern is not really exciting. Hasn't done too much from a price perspective. But there's a few for you to check out. You too, DJ. Have a great weekend. Cardano, yeah, but Cardano really, as much as I'm a fan of Cardano long term, it's been just the party pooper. Party pooper. What is, Huh, that's funny. When I type in cryptos, it always does that to me. There you go. There's your Cardano. This is a really, really ugly chart. I'm not a big fan of this one right now, although I do hold Cardano and I will hold it for a long time. It just doesn't look very good at this point. Just one big downtrend. Let me see BCT. I don't know what that is. Todd, is it a crypto? It's not a crypto. It's not showing me up anything. It's just there's all kinds of different BCTs here. I don't know which BCT you want. So let me know if it's an equity or crypto. It's around the kind of crypto talk. Oh yeah, Big Eb says Polkadot. Yeah, Polkadot's one that I'm a big fan of. We're at a point right now where it looks like a giant Head and Shoulders, like a massive Head and Shoulders, which is not a good thing. Let's go to DOT. There you go. You're making these lower lows and lower highs, which is not good. But my long-term thoughts for Polkadot are very, very positive. They do a lot of really good. I like their project. I'm really, mentally invested in what they're doing. It's kind of a much more unique project than something like Ethereum or some of these others, as far as how they're connecting everybody. Merlin, do you think we can Head and Shoulders on Solana will hold? Oh, let's go Sol. We turn it. This. I'm sure that right now, Edwin is just dying because all we're talking about is crypto. Sorry, Edwin. Is this a Head and Shoulders? For me, it's not, because of how low this point is. And here's why. So for Head and Shoulders pattern, if you're looking at it this way, it doesn't really fit. I mean, you have the head, the shoulder, but you don't have the second neckline touch, right? So then you really have to go here to make this a Head and Shoulders pattern, which means you have the left shoulder, the head, the right shoulder, and then potentially a breakdown. So I don't really look at this as a Head and Shoulders pattern. I do think that prices will probably hold at this 130 mark, which is where it bounced off of, but that's my take on it. Oh, the carbon credit one. Yeah, I don't see it showing up on my list. So if you go here, you can just go BCT, and if I click on cryptos, it just. This I guess is, but it's only on one exchange called HoneySwap, so I don't know if this is it or what, but I wouldn't touch this thing. There's not enough liquidity. A lot of them. So here's one way to kind of find out. If you go here and you go to CoinMarketCap, go to CoinMarketCap and I'll do BCT. So there's Bitcratic, and then I think this is the one you want, this base carbon ton by Toucan Protocol. Well, here's one of the problems with it. Market, and it's only a swap site, right? So there you go. It's only only on swap sites, which generally means it's not very popular, it's not very liquid, and it's only really trading these two currencies, BCT, CliK, and USDC. So I personally would just stay away from it. It doesn't have the liquidity that I'd be looking for at this point. It could definitely evolve and become much more liquid. Let's see. I believe in exit strategies. Why not with Bitcoin too? It's a good question, Jimmy. So for a lot of these, if I'm skeptical on the project, right, and a lot of the ones I have in my portfolio, I'm not convinced that they are the best of the best and will be around. So I would in those ones, I would, put a limit and say I'm out at a certain point. With Bitcoin, I wholeheartedly believe in what they're doing, and I think Bitcoin will continue to go up over time simply because of the math and adoption. Those are two factors. So could I market time Bitcoin and sell sell at 60 and try to buy back at 30? I could, but instead I'm just buying more as it drops. I'm thinking, for me, Bitcoin is a 10-year, 5 to 10-year play. As I mentioned, I think 2 years ago, I did a show called Why Bitcoin Will Be $100,000 by the end of this year, by the end of 2022. And I still stand by that. I think we will be. I also think that probably in 5 years we'll be at $1 million per Bitcoin, which is much more lofty. You're talking significant gains there. But if adoption kicks in like I think it is, you will see more people using it, therefore more demand for an instrument that is actually deflationary. It's losing cryptos on a regular basis. So more people chasing fewer supply means way higher prices. So to me, that's the main reason. Bitcoin, to me, I'm putting in a category by itself of I don't care what happens. It drops down to 3,000. Cool. Buy some more. All right. Yeah, the carbon credits is a very interesting one. I'll look more into that right now. I don't know much about it, but cool. What else do you guys got? What time are we at? Oh, 20 minutes left? Jeez Louise. I don't think you can buy crypto. Rob says, can you buy any of these on my TD Ameritrade account? I don't believe you can at this point. I don't know if Ameritrade has crypto. I can look for you. Let's go. Ameritrade. Crypto. Just go straight to eToro. So no. Oh, hold up. Cryptocurrency trading in Ameritrade. While TD Ameritrade doesn't offer trading in individual cryptocurrencies, we do provide numerous ways for you to get exposure to the cryptocurrency market. So they're probably going to just point you at different instruments, but not cryptocurrency. So unfortunately, no cryptocurrency at this moment. Bitcoin futures, there you go, in ETFs and trusts. So the answer is no. All right, what other questions you guys got for me now that I've ran through everything? Obviously, there's going to be nothing going on for Monday's session. We got closed markets for Martin Luther King Day. And I still think we're doing a show, but yeah, you can buy the grayscale on any of them. But here's the problem with that. If you look at grayscale is supposed to be 1/1000th of a Bitcoin, and it's not. Here is what grayscale. Here is, I think I actually put it on my list. Here is the Grayscale Bitcoin Trust, right? And you can see here this black line. That means that the Grayscale Trust, or the shares of GBTC, are equal to Bitcoin, meaning they're right where they should be. In this case, you notice right now, it's $12,000 cheaper. And this has to do with a lockup period for people who hold GBTC. It's a trust. Right now, this trust is trading at a significant discount, which sounds appealing. You're like, oh, a discount, great, I can buy it cheaper. I don't believe that this necessarily has to go back up to zero. I mean, obviously, if this had to go back up from negative 12,675 to zero, I'd load the boat. I would buy every single share of GBTC I could get because it sounds like free money. Oh, it has to get back up here. It doesn't, right? And it can continue to stay broken. And you notice back here when we were talking about this when it first started coming out, we were talking about some of these huge elevated premiums, right? And why you should just buy Bitcoin, not the trust GBTC. Then all of a sudden something broke, and now this thing just looks awful. So I really wouldn't mess with this. I would not long-term hold it. Catherine says, what about BITO, right? BITO is the Bitcoin futures one. There is a price gap or price lag that you're going to get. And the reason for that is there's so much volume that goes into it. There's actually a bit of contango. And it means that they're using different contracts to establish the price of BITO. Now, one thing I hate about this is, it sounds great. Like, oh, this is a Bitcoin ETF, right? Oh, yay, honky-dory, it's a Bitcoin ETF. Well, it's trading at $27. That is, what relationship does that give me to the price of Bitcoin, which is currently trading at 43,330? Is this 1/10, 1/1000, 1.65? There's no mathematical calculation, and it's done by design. Because if you don't know what the tracking of this is compared to Bitcoin, you can't tell how it's performing, right? I'm trying to find a way. I meant to do it. I just run out of time in my day to graph this against the price of Bitcoin. I'm willing to bet you that if Bitcoin's down 5%, this thing's down like 7 or 8. You're going to lose more because it's a futures product. There's fees in there. There's contango aspects. And over the long haul, it's going to cost you more money. What you should do, if you really want to get into Bitcoin with a security, is wait, right? If you look at, I think it's February 1st, they're going to be rolling out, or the SEC has on its plate right now 3 applications. There was dozens of them, but there's only 3 left. They're saying, we want a spot ETF. One of those is Grayscale, and there's a couple others. One of the votes is February 1st, another vote is February 6th, and I think one of them is in March. So we could, in the first week of February, see a Bitcoin spot contract ETF, which means that ETF would now have to buy physical Bitcoin. That I'd be okay with buying. To me, that would be legit. But I don't trust the futures products. It's not just BITO. There's BITO, and I think there's BTF. Right. This is another one. This is the Valkyrie Bitcoin. Which one? Oh, well, I think the Valkyrie has cheaper fees. But let me see if I can do. Let's go to stockcharts.com. Right, these should be absolutely identical. There should be no difference in these 2 charts whatsoever. So I'll do performance, and we'll go BITO and BTF. No, they're pretty tight. You can see slight differences in those, right? And that has to do with fees, the way they allocate their futures. Sometimes they're using forward contracts. So these are pretty tight. What I can't do right now is I don't think I can add on. I can't add on Bitcoin futures. Let's see. Let's see if that does it. Oh, I might be able to get this on here. There you go. So if you look at this, we go back to October when all three of these really started, because that's when the first ETF came out, right? Look, I know it's not a big difference, but since October, Bitcoin's only down 27%. These futures ETFs are down 29 and 30% respectively. So you're getting 2 to 3% more loss by using those futures products, and that has to do with fees and contango. So that's just part of it. There you go. Now I didn't think I could add on that BTC USD, but there you go. Why not get involved with MicroStrategy? Good point. MicroStrategy is another play that you could do, MSTR, which also has been getting slaughtered recently. Let's add that on here, shall we? Let's see what it looks like on our comparison chart here. And we'll go MSTR. So MicroStrategy is in purple. Wow, it's almost perfectly with it. That's pretty funny. I don't know. I would personally, if I had to pick between these three, I would obviously buy Bitcoin USD. Number two, I'd probably go with MicroStrategy. I think MicroStrategy is going to continue to leverage themselves more and more and more into Bitcoin. And if Bitcoin does have another big run, MicroStrategy could do better than the ETFs, I believe. Oh, there you go. There you go. That's a good point. And as David says, yeah, just go to the Canadian markets and buy the Bitcoin ETF, because the Canadians lead the world. They have a Bitcoin ETF backed by spot. But Americans, some reason, I don't know whether it's our arrogance or stupidity or both, won't let us have it. How do you feel about mining companies as a long-term investment? Not my area of expertise. I've always been somewhat not skeptical of miners. I certainly think that there's a place in a portfolio. I like to have the actual metals, but if you look out here and you go to something like oh, wow. I completely have drawn a blank on the miners. Holy cow. I had so many ticker symbols. There's the junior miners of the miners. I cannot remember the ticker symbol. I want to say DJX? DGX? No. For some reason, I cannot remember. I know, Chris. TradingView does have it, but it's easy for me in that stock fetcher. I like the way you can scroll through. You can go here, and one really cool thing about it is you can scroll and change your start date to see who's performing better or worse in a short period of time. No, it's not WPM. Oh my God, what is the gold miners? It's GDX. I could have sworn it was GDXJ. GDX. Yeah, that's what it was. Okay, so it's GDX and GDXJ. Yep. I don't know why I didn't think that. This is probably, if I was to look at the miners, I would buy something diversified, like GDX, which are kind of the big miners, and then GDXJ, which are your junior miners, right? I think both these can have a place in your portfolio, but again, look at the trend. You look at the price of GDXJ, it's just been on a steady decline. You're down 30%, and GDX can be very similar. So, while I like miners overall, right now it just doesn't seem to make sense to add them to my portfolio. You look at something like gold. Here's your GC futures. Again, we're just stuck on this sideways trend, really doing nothing. So I don't know whether the price of gold is having an impact on the miners, or just cost, or maybe not having enough workers because of COVID is hurting them. But certainly the miners don't look like they're doing really good right now. So I have to say, stay away from it. Now, Rob says, Freeport-McMoRan, FCX. Yeah, Freeport-McMoRan. I am definitely a fan of Freeport. These are a pretty diversified metal company, basically digging everything out of the ground. But you're at all-time highs again. This, to me, when we talked about it, was one of our infrastructure plays. You guys remember? I think that was back in September. We were talking about it, saying, "Hey, it's selling off." Now all of a sudden, it has reversed and been making higher highs. So Freeport looks great. You really need to wait for it to get above these all-time highs, because clearly it hit it and just came right back down today. But yeah, Freeport-McMoRan, I think long-term is a great long-term hold. Is that it? All right, I want to wrap up. They have all kinds of cool stuff in TradingView for free. Until CliK comes, I'm using TradingView. All right, I think that's going to do it for me for today, guys. When it says they own digital assets in the crypto space, but what the heck does that even mean? Bito? Well, because they have a wide variety of different things. They have some other stuff in that portfolio. It should be straight just futures. It's not. Bito and BTF are different products, so that's again why I just kind of shun them. Look at them. I had a guest on that was pushing FTX. I bought it 20. Good, Big Eb. Well, I don't mean anybody to be pushing anything. I'm glad you bought it. That's a nice little run up there. I didn't. So I kicked myself for that one. Cool. Well, it is Friday. It's the weekend. I am going to retire and take a little bit of a breather. It's a gorgeous day here in Southern California, so I hope you guys had a great week. I'll be doing a show on Monday, even though markets are closed. We'll be here. I'm going to have David Warner on the program. I believe we have David. I posted the calendar. I have David Warner on Monday. I have Justin Krebs on Tuesday. I have Woody Johnson on Wednesday. So we got a pretty full week next week of guests, just because you guys have asked for it. I'll try to get some other ones on, but I need to take a little bit of a break this weekend. So you guys have any comments, questions, feedback? Again, thanks to Edwin for your crypto comments. Let's get you learning more about crypto so at least you understand it. Again, if you want, there are 6 free video lessons down in the comments section below. So Edwin, Doris, Tran, Lee, thank you very much for your questions, and everybody else out here today always joining us for our regular sessions. Thank you guys so much. Hope you have a fantastic weekend. Hit that like button, hit subscribe, and I'll see you all on Monday. Take care, everybody. Have a great weekend.